All right, all right, all right. That's a poor imitation of Matthew McConaughey. But hey, today is Wednesday, April 25th, 2018. Last Wednesday of April, last inventory report of April. It's been a good strategy for me now, going on since I developed it about 2.5, 3 years ago, and keeping sort of a record of it since February of this year. And perhaps I'll share those details at some point. But February, March, and now April. Last week, I failed out of the funded account, but the trading strategy itself went to a 3P target. So it did reach its target during the session. The thing that happened to me is I only had 19 ticks of drawdown until it knocked me out of the funded account. So I couldn't continue on the trade. So last week was a winner. Unfortunately, I wasn't able to capture it and pull myself out of the abyss. And once again, I find myself in the abyss, and sometimes I wonder why, but hey, it is what it is. But that's what happens when you're growing as a trader. You got to sometimes take a step back or 2 steps back to pull that 2 steps, 1 step forward sometimes, so that you can understand where you are to where you want to be. And obviously where I want to be is be able to successfully, on a side note, take on long side trades when they're available. And that has been my weakness now, going on for about, I guess, close to 2 years. So usually when the market is trending down, I can win the combine, I can win FTP, and I can usually do it less than 10 days, more times than not. But when the market's trending up, I have a hard time staying out of the drink. So what do we got going on today? Let's look. Highest volume bar today. Let's go back. What I do usually every session is I go back to midnight, and then I start looking. Now this is before midnight, so I'm not worrying about that yet. So I start looking. Anything really, what I'm looking for is stuff over 750. Like here's one over 750 here, 1018. And I'm looking to see, there's a red 970. So what I'm looking for is volume bars that have reached over 1,000. Here's a red 2088. That might correspond with the low today, 67.45. Let's check in a little bit. It's usually pretty close to it when you see that pre-market. Here's another high volume bar right there, 1246. And we have 1590. So it looks like the blue side is 1590. And that is coming in right there at 852. And the red we saw earlier, so let's go find that one again. There it is. Here's the red 2088 at 644, I believe. Yeah, 644. Why is that significant, you ask? Well, usually it's a barometer of what side's winning the fight right now. So right now, the difference being 498 to the red. Normally what it means at this point in time is that the market should be up, then it should be down. So once we find the low, we want to see where the market is, and then we can kind of translate that out. Ideally, what we want to see on the inventory number itself is higher than 2088, or a combination of 2 or 3 bars that are higher than the 2088 in the color that we want to trade with. So blue usually we want to trade down unless it's a failure bar. Red we want to trade up unless it's a failure bar. So I tend to go short more times than not in the open trade, because usually one of two things is happening. Either, let's just say this is the market, right? Just this area to here. So either one of two things are happening. So let's say that this is the market. Either on the inventory number it shoots up temporarily and then it shoots back down, or it does the reverse of that. But what you see is the report number, like a red or a blue number, comes out. Red usually sends the market down, and blue, as it comes out, usually sends the market up. That's what you can pretty much count on. Like when you see a blue, you see an up move, and when you see a red, like right here, you see a down move. I mean, we can go through it. Here's blue, there's blue going up. I wish we could just trade red down. I wish we could just trade high volume spikes and get involved and just kind of hit this market. I don't know if you can or can't, but sometimes it's profitable to, you would think, to scalp. But if you hit this, this is where the blue bar hits right here. So there's not much up left available on the blue side. The true move was to take it short back down. So that's why the blue a lot of times signifies a down, even though preliminarily it might go up, like we see right now. Like the blue right now, you see right here it makes an up, but this move right here really signified a down. So in other words, if you would measure this up move from here, this line is less than this line. Well, that's way too long. This line going down. Alright, so we're at 10:06 and we're waiting on the inventory report. Comes out at 10:30. I will be back. As far as the daily looking down, like I like to do, I like to go top down. We had sold, after going to 69.38, 39 I believe yesterday, and the high prior was 69.55. Last two times we've reached up above roughly the 69.30 handle, we've sold off. So there's been a lot of sellers up here that don't want $70 a barrel, is what I would tell you. Although I do believe that if we attempt this third or fourth time, we're going to bust through 70 and probably 70, 75. So there's a lot of fighting going on to keep the market below $70 a barrel right now. So that's what you're seeing in the volume figures, and you can see the volume kicking in here over the last few days. Well, actually this contract just became the active contract, but still you can see the volume really kicking high over the last few days in this contract as it became the active contract, obviously. But you can see that the reds and the blues are fighting even down here too. So the reds here, the selling off the red, the blue, the buying off the blue. And it's almost like a reverse barometer when you're looking at the volume figures as opposed to the tick chart. Usually red signifies a down move and blue signifies an up move. A lot of times what you see though is that the volume itself, even though it's blue, it tops out and then it comes down off of that based upon if it's high enough. So it's got to be what I call high volume bar. Highest volume bar usually leads the way more times than not. So if we look at the daily chart, we can see that we're in a range, in a congestion area, a trading range, let's say. In between, it looks to be about 67.5 to 69. So there's like a $2.50 range in here that we're trading inside right now, in a trading range over the last few days, since we've reached to it. Looking at the hourly chart, in the hourly chart, a lot of times we can actually put out an extension and also retracement on it. So this is what I like to use this as my extension chart. So we can see an extension that can still hasn't been run on the daily charts, bringing the market back underneath the 66 handle. And if we look at it more in tune of where we are right now and where we can go, let's use this line, and then let's use that. So we're looking that we could run way a little bit further down, and we'll hold this one on the hourly chart today so we can see it. And then if we look at our retracement possibility, and really what I like to pay attention to is a 50% retracement more times than not, or the first retracement that we need to pay attention to on the way back up is this one right here, and you can see that the pivot's in play in the retracement, so we don't need it today. So we know that pivot's in play and we can get rid of the retracement. So we can retrace easily off of a number up to retracement, up to pivot and then sell off. We could retrace up to pivot and then keep moving up. So be ready to take it on. On the extension side, where can we go? It looks like we can run at least down to the S1 line and possibly to S2 if we get enough run. And then I like to keep it up on the 15-minute as we break down, and we just look and see where we've been trading for the 15 minutes. And I just want to know what it is. Really what I want to know is where the 200 bar line is on the 15-minute chart, and where is the 2-minute line on the 5-minute chart. So we're trading right at the, on the 5-minute chart, we're trading right on the 200 bar line, and on the 15-minute we've got to run the pivot to get there. So know where your important numbers are, where there could be possible minor, major support and resistance is what it gets to. Alright, so that's our chit chat talk today. I'm going to pause and let's see, we're about looks like we're about 20 minutes outside of the report release. I'll be back. For you it'll be magic. I'll be like back, and next time I unpause I'll be like, wow, hey, it's 2 minutes to go. But for me, I gotta sit around and wait another 16 minutes to say that. Hold on, we'll be right back. Alright. Another poor imitation of Matthew McConaughey. 2 minutes to Wapner. 2 minutes to the most exciting, most manipulated, most bestest report that's out there. While we got a minute here, let's pull the report itself over, see what we're expecting. Inventories today, we're expecting 1.6 million, previous 1.1, so they're expecting a decrease in the forecast, and we'll see how that plays out. So once again, at Top Step Trader, you're not allowed to trade until 9:31 print. So you'll see me waiting a minute before I start getting involved in the trade. I say this every time, but hey, if this is your first time watching one of my videos at Top Step Trader, you've got to wait 1 minute on this economic report before placing your entry and getting filled. Alright, so there it is. 29.59. 29.59. It is new highest volume bar, and it's red in color, obviously. So we're looking at a failure pretty much underneath, or we want to be long above, short below. So we want to get our trend line on right about here, looks like. Well, and we'll piss with that later. Above here we want to be long. Currently 38 would be our short, all things being equal. 38. 38 to short. Looks like we need to get the market above where we broke down from. We're in. Let's get that on the chart for now. Notice that I've got a really big target out there. It's because I want to see it. I want the home run trade, obviously. You don't know that. 67.39 initial target right now is 67.17. 3P target today is 66.73. Let's get that on the charts if we can. 66.73 is a 3P target. If we can get to it. Doesn't look like it's going to happen right now. Looks like it's going to run us out. It's very violent. Two-thirds stop today is 11.9, which translates out to 12. That's why you see the 12 right now off the preliminary. We went to 49 right there. We'll hold 51. I still like the 39 mark. That last move went to 41. We'll hold 39. Usually on the long, even to think about it, I like to see it cross above the 200 bar. Now remember, we're trading in between pivot and S1 right now. Very close to S1. I don't know how. Let's see how close. Nah, we're not too close. Let's see. We need to come down. S1 is at 67.05, so we're closing in on it. $67.17 is a 1P move. I need to move that lower, but that's $67.17 is 1P. $29 is the new low. So we've made a new low by 3 ticks from previous. I expect us to continue this downward onslaught for a while. Normally if I get run out twice at a level, I'll stop thinking that that level can be run. Market last time went to 53 before turning around. 52 that time. Are you kidding me? So we have a long signal above that 52 mark at 54. And be 2 times above the 200 bar. And we have a short signal at 38. We'll see which way the son of a gun wants to run. I'm willing to lose the combine today, by the way. Because I'm getting crushed and I'd rather get a fresh start. I don't like the way it's looking right now on the short side. I mean long side. I'd prefer to lose on the short side. 43 to short. And we're going to use our maximum loss that we can. Alright, 67.43 changes the numbers around a little bit. 21 is the first P down. Three P now is 66.77. Oh man, that number come back to haunt me again. 66.77. I've been wanting that for a while. Gann number today is 66.5. We'll win or lose our combine on this trade. New low is 67.23. Looks like if I would have just held above 56 today, I'd have stayed in the trade itself and not be down. So we've attempted 3 shorts, 1 long. And I'm willing to risk the combine restart on this trade because I really need to get out of the gunk today on my best trading strategy. So the way I look at it is if I lose on this, then I lose and then I just restart. I have to pay the $100, but hey, I think I've learned a few things along the way in my day trading that's going to help me in the near future. Alright, 1P has been run. 1P has been run. There's a high volume bar of 3,000. That's new highest volume bar, 3124. Hopefully we can continue to come on down. Come on down, as the Price is Right used to always say, right? Come on down. 3124. Hopefully this is just a minor hiccup as we continue to make an onslaught to the downside. 67.14. 3P once again is 66.77. Our next down target is 66.99. 705. It's getting close. So we're coming into the S1 line right here. $67.11 is new low. Time for some music. Since I'm not monetized anymore, might as well. Maybe someday I'll get monetized again. I'm on the track to get there. Stupid YouTube rules. a pretty good fight off of the low right there. But I'm locked. I don't want to reverse and get hit for the market to come on all the way back down again. Path of least resistance is still shorter. We went to a 50% retracement, a 50% extension at 67.14, and we've come off of that.
It's the last song of the night. Felt like my heart was skipping beats.
I went to the ER.
So what's going to get hit first will be my max daily loss.
Come down the street and knock on the door. With the star on it.
If it basically goes up 15 ticks from here. Yeah, it looks like I'm going to get run out here. Went all the way back. Just not one of those days that works out. I blew this combine myself. Me, myself, and I did it. I caused this pain by keep trying to figure out how to trade the long side. It's killing me. Okay, that's enough up now. Let's go back down. Really didn't have any more opportunity to trade it. That's why I wasn't willing to reverse that signal. Now it's proven that it wants to go up. Highest volume bar is above that mark now that we talked about. The hardest trade to take on is the long when it doesn't want to go. If we go back here and measure this right here, this has ended up being the low of 67.11, and it's moved up. And it tricked us enough to get us in. Goes down 1p and then stopped. If and buts were candy and nuts, where would I have stopped my trading today? Probably at -3 and not taken on that fourth, or if I take that fourth trade on, I would have made sure that I only lost around 40 ticks or so. But it's very difficult when the market's not going to move the way that you preliminarily think it's going to move. And it's extremely hard to catch a long. It's much easier to catch that short because it has a tendency to sell off a lot quicker. And then eventually it becomes where it becomes a good long. It's a question of where to catch it now. Perhaps I should have been looking at it here to reverse and then to take it on and not been locked and loaded in one side. But I get tired of losing, guys. That's what it ends up being. I get tired of being wrong over and over again. I just rather start fresh and new, and it's a frustrating experience sometimes to learn. Sometimes I feel like you relearn how to trade all over again. So the day obviously did not work out. I wouldn't have taken a hit. In hindsight, obviously, not being locked and loaded, I saw the volume here, 31.24. I thought that could be the stop of it. It looks like around here I should have reversed if I had had enough ammo in all, but it took too long to get positioned at the 9:30 mark. Took too long to get positioned in here, and it cost the thing. So my mistake, if there is a mistake, was trying the long on too soon. This long here was uncalled for. I should have not taken it on, and that's what I have to get better at. So if I would have had two trades coming into that third trade, reversed it right here, then I would have been able to say I'm doing okay right now. So by the way, that dead zone, if we measure it, there's your dead zone right in here. So it's tough. It's not easy to be a trader, because when you're right, it seems like you're on. I figured out a few things along the way. Today was not, it would have not been, at best it probably, I don't know, this is, even the up is not proven that it wants to go up here. So all the way back down after running through here, it's not a good trending day in the inventory strategy. So most likely this would have been a loss of at least 30 to 40 ticks today. Minimum 30 to 40 ticks. So not a winning day today in the inventory strategy. I personally will be resetting my combine, have a fresh combine, and hopefully utilize some of the crap that I've learned on the upside in this violent market. This is a very, very violent market that we're in right now. It's extremely violent, and it might be wise just to stand aside for a while, but I want to trade it. So it's very violent on both sides. It's hacksawing its way up and down right now, and it makes it very difficult. So you have to stand aside until you see things. So here's the 4,093. This ends up being highest volume bar on the blue side. Now we're selling off. So go figure. Now we're heading down. So maybe if I would have been able to plan myself a little bit better, the market would have paid to play. The second highest volume bar on the red side sent the market up right here. So that would have been probably a good time to get out for a while until this came about. trading in between pivot. I didn't want to take on the long, so that was the point of me not wanting to take on the long. You see the way it is. I take 3 shorts, one long, and the long I take was a mistake. So I should have waited for, I don't know if it was a mistake or not. It could have went up from here. Wait a minute, I was in before that. I went here and it went nowhere. So I was in front of the dead zone, so I should have stayed out of it. Then once this printed, I think you would have stood a better chance of catching along. Because once you see the highest volume bar kick in, it usually needs to have another one before it'll even think about turning around. And then you see the highest volume bar on the blue side, and it looks like you could have went short right in this area and take it on right now. Hindsight's always a winner, though. I can say that I was not in tune with the markets at all on this combine here, and I've got a history of effing up the first combine. I don't know what it is. It just, and I started out good. I had my first day on Friday was a winning day, but today is not a really good trading day. I mean, we're inside the dead zone again, so this would have been, no matter how you look at it, would have been a tough on either side of the market, in my humble opinion, up to this point. Trading the inventory strategy, it just did not work out. And not every time is going to work out. I mean, just the way it is. I mean, usually if I can't catch it within 3 times, I should stop trading, period. So usually I say 3 or 4 and stop. So 3 today would have been the stop and not taken on any longs at all. That would have been the smart thing to do. I liked my short entries though. My shorts were valid. I liked them all. I didn't like my long entry. I looked at it and I thought 2 times up over that 200 bar we could run, and it was an iffy situation at that point, and I gave up that trade. Alright, that's going to do it. Once again, let's utilize some of the information that I've learned now and see if we can turn it around on the next combine. Talk to you soon.